Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
Hey, Dan, another episode, my man.
Buddy, what's up?
What's up, buddy? Long week for me. How's your week going?
Good.
Good?
Yeah,
Everything's
good, man. Yeah, we're just
good. Family's good. Kids
cruising through the week. Cruising, man.
I don't think you ever cruised
Cruising.
the week, by the way.
No. Thrive in chaos.
Exactly.
Thrive in chaos.
You thrive in chaos.
Thrive in it.
Speaking of chaos.
Yeah. Speaking of.
Oh, man. You know, a lot of our audience are dealing with the same struggle. And I want, especially like California, even Arizona. And where I'm going with this is these bigger cities where it's expensive. And so while real estate is very promising, it ain't so promising where I live, right? I moved back to Arizona and now everything is totally different priced, right? Way more expensive than Texas when you look at it from a real estate perspective. Maybe taxes the opposite way. But a lot of investors, and the one thing I love is they want to invest and they're thinking about investing outside their own backyard.
Yeah.
But still, most do. So, you know, and let's talk about that. Most investors will only buy where they can feel and touch the home. Yeah. And there's reasons for that, right? But I want investors to understand that there's so many resources and tools. We're one of them that helps you invest outside your market.
Right.
And so to our listeners listening now, why do you think most investors only want to invest in their own backyard? Let's start there.
Yeah. I think you said it, right? Like they want to be able to touch it, feel it. If it's burning down, they want to be able to drive by and see it. Yep. You know, they want the ability to see it. I think that's one of the cool things about real estate is that you can touch it. Yeah. You know, if you buy stocks, you're not touching stocks. Yep. I mean, you show up to Apple and you're like, I own Apple stock. They're going to go, thanks for coming, sir. You can't get in. Like you don't pass the security, you know, so you're not really an owner of those things. Real estate, you own it and you can touch it, feel it, you know, and it's like that age old saying, like buy land, they're not making more of it, you know? So I think that, you know, real estate offers people that want alternative investment, a place that they can go and feel comfortable about, you know, seeing it, touching it, being around it, all those things. But yeah, to your point, you know, what makes it hard is when you live in an area that, you know, is flourishing. Yep. Southern California is a great example of that, you know, like LA. LA is so expensive. It is so, they don't think it is, but we all think it's crazy expensive. But it is expensive to buy real estate there and own it as an investment. Like the barrier of entry is just higher. Yep. So if you've got a few bucks and you're wanting to invest in real estate, you got to save a lot more to buy in LA than you do in Birmingham. You know, and before, like this is all new stuff, right? Like it is that, you know, you didn't have enough data and information in order to make an educated decision. Like you felt like you had to know your local agent and your local agent was the expert, and that person, just because of their knowledge, you were buying based on that. That's like what it was. And like, I remember as a kid, my parents were in real estate and my dad would invite over like the local real estate agent to every one of his like custom homes that he was building, you know? And I would sit there and listen to the agent, you know, tell my dad what the home was worth. And it kind of like got my mind thinking of like, well, how? Like, how do they know? Like, how do they know? Like, how does this guy know that every house is worth that? Like, what makes him the foremost expert? He's just a real estate guy. He's just got a license, you know, he's got a cool Cadillac and he's obviously good at what he does, but what makes, like, how does he know? And what I learned later is like, he didn't really know. Like he was taking a gut check too. And like, he was making a decision based on a few pieces of information that he had, you know, this property down the street sold for X, therefore your home is worth Y. Like that's how they made decisions.
Yep.
But now with all the data that's available out there, like you can quantify anything and make a decision and be fully educated about that market and have never gone there. And you have way more information than probably the local agent does about that specific piece of real estate. So I think the game has just changed. And, consumers are either going to be comfortable with it or they're not. And I don't know how to change their behavior if they're not comfortable with it. But I think the analogy of like that stock market thing, like you don't get to like go into Apple boardrooms and make decisions when you buy Apple stock.
Yeah.
With real estate, you still make all the decisions,
Yep.
but you don't have to live there. You don't have to see it in order for it to make the return on the investment.
Yep.
Like you don't have to be actively involved in it. So I don't know. I think that a lot of people, I mean, you talk to a lot of investors. What are they telling you?
Yeah, most of them are fearful of resources.
Yeah.
So I can't touch it. I'm not there. I got the data. I got the insight. But what about property management? And that's
Yeah.
where we can help. And so to your point, now everyone has access and more insights and more resources to support their investment opportunities and outside the backyard.
Yeah.
And so now that we provide that, they're a lot more comfortable
Yeah.
of investing. So I can tell you right now, there's a ton of investors on the platform.
Yeah.
They're like, where's the hot market right now, Marvin? Just
Yeah.
tell me that and I'll buy.
Right.
Oklahoma, Georgia, Florida's of the world. So
Yeah.
you're definitely seeing it. But it's because we have insight and data to provide them that they're a little bit more comfortable with it.
Yeah.
Yeah. I know you own property outside of Arizona too,
Yeah.
right? Like,
Yeah.
tell the audience, are you comfortable? You got like,
Yeah. I mean,
why do you sleep at night with properties you have outside the backyard?
The way that like Lindsay and I think about investing in real estate is we just simply think that if we're going to get the best return on our dollar somewhere else, then we should do that. Like for us, it's a game to try to get passive income and passive wealth. Like that's the game that we're playing. And, I could care less about what it looks like and I could care less about where it is in a location. And I know that we're different. I know that that's comfortable for us because I know this industry. Like I'm very comfortable with calling a property manager in Nashville that I've never met before. And I can tell like by his reviews, I can tell by like the number of doors that they manage, the tools that they use, all of those things that they are a quality management company. And I'm going to get excellent service as a result of that. So I'm vetting that for sure, vetting that person out. But I mean, I have a lot of real estate that I've never seen.
Yeah.
I wouldn't even be able to tell you what the street looks like or what the interior of the property looks like. Have bought and sold them without ever going to them. So I think it's just like you got to get comfortable with this idea that if you're going to get into renting properties in other markets, you can do it.
Yep.
You just got to get a really good property manager that you can trust and that is efficient. It's got the right tools, all of those things. Like it's going to operate just like it would if the property was 45 minutes from your primary house. Doesn't matter. And you're probably going to get a better return. And the barrier of entry is going to be lower.
Yep.
Like the reason we started buying out of state was because the prices here just got too high. Like they got so high that I wasn't able even to acquire them, where I could go in these other markets and buy two of them for the cost of like what I was struggling to buy one for here.
Yep.
And I wanted to put my dollar to work. And so in order to put my dollar to work, I had to go to these markets to do it. That's what we did,
Yep.
So I don't know. I think it can be good for that reason. Diversification helps too. It's like you can see areas that, like I grew up in a town of 2,000 people in upstate New York. I think we've been over that. But in that town, GE had like this big factory there. And then GE closed the factory.
Yep.
So the entire area, everybody worked at GE or at a company that serviced something for GE. That's what it was.
Right.
When it went away, there was nothing left. There was no industry in that area, right? Home values plummeted. Like the whole area just got super depressed. But when that happens, you got to be willing to go somewhere else and do the same thing, right? And that's what my dad did. He went to Arizona as a result, right? And he found a project in Arizona doing the same thing he was doing in New York, just on a different place.
Yep.
And, he was able to make it work. So having the ability to be nimble, I think has a lot of value too.
Yeah. Yeah, for our investors that's listening, what's your strategy? What's the game you're coming in? And don't be afraid to go across those state lines, because at the end of the day, aren't you in this to get returns?
Yeah.
That's what you started investing for.
Right.
It wasn't to live in the home.
Right.
Take emotion out.
Right.
And sometimes you have to pivot and go across state lines. That's why using tools like what we provide and using data again, you're doing it already in your backyard, right?
Yeah.
You're making sound decisions, but now you're just doing it across state lines. And by the way, it's becoming more global. I can't tell you how many times I get advertised for Belize,
Right.
Colombia, Cabo,
Right.
Mexico to buy real estate.
Yeah.
Too, right? Are you seeing those things as well?
And they hear, right? Like
Yeah.
those people that live in those countries to invest their dollars here. Like,
That's right.
we have a lot of like Asian capital flooding into our market, from Japan and China, where people are like, their real estate's brutally expensive.
Yeah.
Really, really expensive to own real estate there. But if they can own U.S. real estate, it's more stable. Like there's a lot of reasons why they get a currency bumper. Like there's all these things that they do. And they can own real estate here.
Yep.
And I think that, like, I don't know, I wish that more people would get comfortable with it, because once you do, it's just not that scary. It's no different than what you're doing in your local market. The difference is like, instead of me being able to drive to the property, I have to get in a plane to get there.
Yeah.
That's it. That's the difference. People are people across in different states, the same. They're dealing with the same problems, the same stuff. It's a hot water tank. It's a hot water tank here. It's a hot water tank there. And they're, so I don't know. It's just, to me, it's not it shouldn't be a geographic thing. Like you want to pick markets based on like the quality of the market, the quality of like the job growth in that market, the quality of like the schools in that market. Maybe there's like, a new, like we saw a big one in Texas recently, when the Cowboys put their new stadium outside of Dallas, right? It created like another metro. And around that stadium, you saw all kinds of growth around that stadium. We saw that here when the Cardinals put their stadium out. And, at the time we were like, it's in the middle of, BFE. Like, why would they build that thing out there? But then it was a market to invest in, because then it thrived, as a result of those big factors that happen. So don't miss those. Like, don't miss those opportunities to ride that wave, because that's where the money's at.
What's funny is, I want to remind the audience that people sell because they're going through something or they have a situation. And so speaking of that, I actually had a client where they didn't have a certain area, but the deal was so big that I called them and said, I know you don't invest in this city, but I got to show you these numbers. And you know what he wound up doing? He wound up buying that home. Yeah. Because he understood, like, wow, that's how you guys help me. It's not about where the home is. Right. You wanted to see X return. I'm going to triple that return with this property. So that was awesome. You're different, man. I got to tell you, right? Like our audience is still probably mom and pop. There's some out there. And I just want to talk to them for a second, because let's talk about there are some challenges there, though, right? When I hear everyone saying Oklahoma's thrive. Oklahoma is the next, or Oklahoma City is the next Austin. Yep. Kansas City is the next Austin. What are some challenges, though? Let's talk about the challenges, because I've never been there. Yeah. But I know to invest there because I'm trying to stay ahead of this curve and become the next millionaire in real estate. Yeah, like what goes wrong when you do that? That's right. Yeah, I think that like if you were to get into one of these markets and unknowingly buy in an area based on like cursory level information, that could happen. Like we had a time here in Arizona where everybody thought that Florence, Arizona was like the next boom town, right? So we have Queen Creek and Santan Valley. And then beyond that,
there's Florence,
Yeah.
and Florence has been its town. It's been there forever. It's a like their industry is prisons, but then around it, there is a lot of vacant land. Like there is a ton of vacant land in Florence proper. And, there was like when home prices were going up like crazy.
Yep.
And we had this thing where we'd say you would buy and drive till you qualify. Like that's how far out you would go until you qualify. Well, as home prices are going up, people are buying homes at auctions, like
Right,
all this
right.
stuff's going on. Well, the further out you go, like that next area, that edge is where people were buying land thinking, well, the builders are going to come here next.
Yeah.
Well, they're still waiting because it never quite happened, right? So I think you got to be careful, like about that stuff. When I think about this, I like to buy in areas that are developed. Like I'm not the one to be the pioneer to predict like a new metro center.
Yep.
Like that's not going to happen. I don't want to be the first guy into the market. But I do want to be early enough to be able to take advantage of the market. So markets like you're talking about, like Oklahoma City, it's pretty dense, right? What it's going through is like a gentrification.
Yep.
It's actually going through a phase now that it's become like cool and popular to be there.
Yep.
The restaurants and things are changing. The nightlife is changing. The entertainment's changing. It's affordable. They've got a bunch of new job growth that just started to happen there. But it's, they've got infrastructure. It's not like they're, they don't have an airport yet. There's no airport in Florence. So I think you got to look at the whole market in total and go, okay, is this an area that is sustainable?
Yep.
Like, is this an area, am I trying to be a pioneer? And like, people have made money being pioneers. Like Bill Gates is one of the largest owners of land in the state of Arizona. Did you know that?
I actually did not know
Yeah.
that. He
So
is.
basically everything west, like between us and LA, he owns a lot of that land, that vacant land.
He knows
right?
something. He knows something.
Well, who knows, right? Like, but it's way, way out. But I mean, when you're that wealthy, then you can take big risks like that,
Yep.
for the future. Because he's not trying to think about this generation or his kids' generations.
Yep.
He's like 10 generations down the road building wealth, right? But if you're just right in our generation and you're worried about your kids and you're trying to create some passive income and wealth, like I think if you stick in these like solid core markets and avoid maybe some of the tertiary markets that are just like like there are good signals, but it may be just a little bit ways out. I think you can save yourself from like a lot of those like missteps and mistakes there.
No, totally makes sense. So all is true as you've been saying all along, right? Use data behind the decision, and all you're doing is taking that same and applying it to a different market.
Right.
You're still going to use data.
Yeah.
Right. You're still going to use insights to make that.
Yeah, like if there's no rental comps, I'm not buying in there. You know what I mean? Like I'm not going to be the first guy to own a rental in a community. That's not happening. So I don't think you have to do all of that.
No.
Yeah.
So do you feel like you have to know the tenant? Because so many investors are like, I got the right property, but I don't know. But right?
No,
you don't need to know the tenant. I mean, there's tools to help you with that too.
I think you got to know the profile of a tenant.
Yeah.
Like you want to know your profile of your tenant, and most good property managers, they have a profile that they're looking for.
Yeah.
And they'll tell you that when you onboard with them, they will tell you what they think the right profile is.
Yep.
And then you tell them your risk tolerance based on that profile. So if they may say to you, okay, we don't accept anybody with felonies and we don't accept anybody with evictions. And you may go, look, I'm not concerned with felonies. Like I'm just not concerned with them. I'm concerned with violent felonies. Right. So I don't want to just like eliminate everybody that's ever had a felony. I want to eliminate people that have a history of violence.
Right.
And that opens up like a bunch more opportunities for tenants, right? Because I mean, you can't always judge that book by its cover. Or people that say like, oh, I would never lease to anybody that's had like a bankruptcy or a foreclosure. Well, like you don't know what happened in that person's life. Like that person could have gone through like a medical problem, or maybe there was a death in the family, or like a major event. That's typically what it is. It's not like people just all of a sudden stop working because they don't want to, and I don't know. I think they deserve a second chance. I think they deserve an opportunity to prove themselves. In my experience with people that maybe I'm I'm too trusting in a lot of ways, but I've never been burned by those people. I find that they pay and they're more willing to pay, as a result. Like they're like, okay, this guy gave me a chance. I'm gonna own it, and like that. I think there's really good things to be had with that too.
Yeah, absolutely. And that's part of the reason why you want to use those resources and tools. Have someone else worry about that. You don't have to worry about that, right? You
No.
hire a property management company.
Right. Yeah, you don't need
Because
to
guess
know.
what? You also have one more other challenge that people think about, and that's state-specific challenges.
Yeah.
I come from Texas where property tax is out the roof, right? Like we don't have state income tax.
Yeah.
But they get it back if you're a homeowner.
Oh, yeah.
And you're going to get, I'm talking some astronomical numbers that people probably don't think about.
Right.
Let's talk about that a little bit. So when you're investing in multiple cities and states, staying on top of regulations, not just from tax, but also what you can do from your tenant perspective.
Oh man.
Right?
Yeah, that's like super important. It's
Yeah.
like, the data up front will tell you taxes and all of that. HOAs vary, but tenant law is critical.
Yeah.
Like you got to know your tenant law. When I think about this, or like where I would encourage people to think about it, is investing in areas where they have landlord friendly tenant laws. Meaning that like if your tenant stops paying rent, that you can get them out of the property in a reasonable amount of time.
Yeah.
There are states where that doesn't happen. Like California,
Yeah. Squatters.
state of New York, right? Yeah. In those states, you can stop paying rent and stay in the property.
Yeah.
Because the eviction process is lengthy and complex and very tenant friendly, right? And because of that, like you as a landlord are taking a way bigger risk in a market like that. So I think it's knowing your tenant laws in those markets is critical.
Yeah.
And the property manager you work with in that market will know them for sure.
Yeah.
They will know how to navigate them. They will have the right attorneys to use and all of that. Like here, we've got very, very friendly landlord laws in here. 30 days, tenant could be out of the property. You could be out if you don't pay your rent. Most states are like that, where they're fairly common, but there are states where it is complicated to get a tenant out, and that's a challenge. Don't mess with that. There's also like regulations around like you as a landlord and your responsibility for repairs. So if let's say like Chicago, for example, like there are regulations there that require you to like if your heater breaks in the winter, you as the landlord are responsible within 24 hours to either find a place for that tenant to go or get it fixed. Like you have to. If you don't, there's a fine that you can pay, in place of that. So, every market's got its nuances, but like you just got to make sure, like that's what I'm saying. Like when we look at a yield, we seriously give you 3,700 different data points in order to quantify that decision that this is the best investment. And we've taken all of those things into account to surface the best investment to the top. And I think that that's what, like we're getting closer and closer to my dream of like solving the puzzle of like, how do I just log in, pick the best investment because it's there, but it's all data driven. But all of those things matter. They're part of the decision for sure.
Yeah. It's still one of the most daunting things, right? Buying real estate, even if it's for your personal home, right? That is a task. And it just adds when you're doing it from a real estate investment. So you still have this emotional discomfort, if you will, especially now you want me to do it cross lines. How did you remove just the emotional piece? What was some of the tricks of the trade for you?
I, as a kid, like I lived in a house that was like a model home my whole life, right? So like my dad would build a house, we'd live in it, and then he would sell it. And that's like how I grew up like that. But I lived in homes that were always for sale. So like I just never got attached to the real estate itself. It felt like a home because we were all there.
Right.
It wasn't like a bad child. It was not like abused child or anything like that. I'm just saying like we lived in home, like my dad treated real estate as a job.
Yeah.
And that's how I, was raised in it. But I understand that not everybody was like that. My grandparents still live in the same house when they moved here to this country that they live in today, they still live in the same house, right? Like they wouldn't even think about moving somewhere else. I mean, it wouldn't even cross their mind, right? Like I would move tomorrow if like I had to, you know, I don't care. I'm not attached to the real estate. So, you know, I think if you were getting into real estate investment, you got to figure out a way to be non-emotional about it. You got to look at it like a job. You got to look at it like through quantifiable data and information. And you got to just think about it that way. You know, even when the tenant doesn't pay rent, I don't get caught up in their story of why they didn't pay rent. They didn't pay rent. Okay. Well, now we've got to solve the next puzzle. Like, can you pay rent? No, I'm not going to be able to pay. Okay. Well, then we're going to go to this option, right? Like, it's just like the succession of events. But yeah, don't get caught up in the emotional side of real estate because it will eat you alive. Everybody's got a story. Everybody's got, you know, some sort of like reason for something. And I think if you just, you know, look at it on the surface and it's just like, you know, you've heard me say a lot is like, you know, it's just real estate. Nobody died today. You know, like it's what we do is not crazy, you know, that crazy. It's just real estate. So I think that's how you got to think about it.
No, that's awesome. Appreciate you sharing that insight. So, you know, for those that's listening, I want to just break it down very simple for them because at the end of the day, we created this podcast as a platform to educate, and we want to educate so people win in the game of real estate at the end of the day. So investing outside your market may be the best thing for you, especially if you live in those cities where it's very expensive, right? Or hard to play the game. And so continue to do that. So let's go through the key steps, right? So now I got some money. I want to start to invest. First thing I got to do is analyze the market. I need to understand what I'm doing. And let's talk about what does it mean to just analyze the market? What are the kind of things you're looking at? So Dan is looking to invest outside of Arizona. You're going to analyze the market. What are some of those things that you're looking at?
Yeah, I think, you know, what I'm looking for is I want to know what the population growth starts to look like, what the job opportunities are, rental demand, property appreciation trends. You know, maybe there's some sort of new industry or, you know, Tesla's gigafactories coming in, something like that, that's going to drive that market. But I also like to know, for me, is like lifestyle. Like, is the lifestyle there going to be attractive to the generations to come? Or is it like too old school or too, you know, not quite home yet? You know what I mean? Like, and like most of these cities are trending that way, right? Where they're cool restaurants, cool nightlife, walkability, all the things that our tenants love. They're doing those things. And I think that's what I'm looking at.
Yep. Cool. So you're researching, you're leveraging data. Obviously, we talk about that on every single show. And then, you know, are you building a network of folks there? Are you building some type of group that can help
like,
you?
I think you got to find your property manager first. And the property manager will typically refer you to a maintenance person, someone that can do renovation, maintenance, touch-ups, that 24-hour midnight call when a tenant calls and they have a leaky faucet. You got to have that figured out. And they're just like, property management's gotten so good. They're so good. You know, when people tell me they own real estate and they manage it themselves, I'm like, why? You know, I mean, you pay very little to have this peace of mind that a professional is managing your asset. It's so good.
And they're a one-stop shop. Because now they don't just manage the tenant; they can do repairs, maintenance.
They
can
manage.
even do
they
cleaning.
manage all of that.
They manage it all, right?
Your accounting, your billing, everything, collections. They do it all. You know, so they don't get enough credit, man. Property management is tough. It's a tough business. But
I talked to a property manager the other day, and the turnover's high. And he mentioned that it wasn't the tenant turnover; it's the landlord, the owner. Eventually wants to sell the property. It's that turnover. And so, they don't get enough credit. So they're figuring out ways to help investors as well find and off-put some of their properties too. So, maybe we should have a segment where a property management partnership comes on.
I've got a couple that have asked if they could join us. So
that's going to be fun.
We'll bring them in. Bring them in.
But, you know, I think one of our early episodes, I'm going to paraphrase here, but you always talk about having a strategy and sticking to it. Right? Do you remember that conversation? Like, this is my strategy. I'm going to stick to this and it'll work out for me. That doesn't change because you move state lines, right?
No.
You're still going to keep this investment strategy.
Right. Yeah. I mean, even if you're like flipping homes and you don't live in the city, like you can do it.
Yeah.
It could be done.
Yeah.
I mean, the people are like, you're crazy. Why would you do that? I'm like, well, because I got I got a solid return on my dollar in that market because I happened to be where the best deal was at the time and I bought it. Like that's why.
Yep.
And it worked out okay. The contractor, whether the contractor is somebody I can drive down the road and shake, or I got to pick up the phone and call them and shake them, I can do that.
Yep.
Like it's not that difficult or that hard.
Yeah. Yeah. So whether you're an investor looking to invest outside your market, or let's just say you invest in your market, but the returns are greater somewhere else, why not just use Easy Street to help you find those decisions and make those decisions?
Explore it, right?
Explore it, right?
Yeah.
Use data. That's all we're saying here, right?
Yeah.
Again, go back to my story I said earlier in the episode. I had an investor, was not looking in Austin at all. In fact, not even in Texas.
Right.
But what he was hungry for was amazing return.
Right.
And I called him and showed him the data. He couldn't deny it. Right. He made that decision to buy that property, and now he's happy. And in fact, you know what he said? Let's put Texas in my buy box now.
Yeah.
And so now he's looking at Texas.
More.
Now I want to buy more.
Yeah.
So I appreciate it.
Yeah,
but again,
fun.
that's what it's all about.
All right, man. It's awesome.
Awesome.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.